Hello and welcome back to Dukascopy TV. It's Monday and once again I'm joined by Jean-François Owczarczak in the studio. Using FinGraph technology, we'll be seeing what's moving and shaking some of your favourite currency pairs. Jean-François, very welcome back into the studio.
Hi Monica, thanks for having me back.
Not at all. Now, we looked at the graphs and last week I understand from your conversation with Elaine that some doubts were still being raised over the strength of the economic upturn in the US particularly. This week's not particularly data heavy, but we do have some indicators which may negate that strength or perhaps show some optimism, be it US durable sales and home sales. But what do you think the graphs are telling us at present with regards to the different currencies?
Okay. Well, just wanted to show our homepage once again, fingraphs.com. We have a few more things here. So we have the introductory homepage here, but we also have a new introductory video which you could have a look at and learn more about FinGraphs, its concept, methodology and navigation.
Very good.
Now we're going to go into our markets and we're going to our private selections. You can see you have the Dukascopy directory here, but in the private selections we've done a selection for this show. And so you have Euro dollar, cable, Australian dollar, gold spot, dollar Swiss, dollar yen, 3 months S&P futures and the futures on the 30 years treasury bonds. Now let's look at it on a daily basis first. The economy is running a fine line. If there's been a lot of talk about the weather in the US, I'm wondering if how much of that weather impact is actually in the numbers, and if the economy is slowing, and we'll probably know over the next few weeks with the numbers coming out if we do have a confirmation of the slowdown, or if it's still if the growth rate is still quite reasonable at the moment. On the other hand, if the growth rate is too strong, you would expect a more aggressive tapering. So that would also be would weigh on risk assets in general. So if we have a tamed growth rate, it means tamed quantitative easing, and the trend we have at the moment on risk assets should continue for now. Okay. We could see that if effectively over the last few weeks the euro has been bid up, the cable has been bid up, the S&P futures have been bid up, rates have started to correct down, or the bonds have started to correct up. That has also helped the gold, less of a deleveraging effect, and gold is making a comeback. We're quickly going to go through these different assets on an individual basis. Start with the euro dollar. What we're presenting here is an investor's view, so basically a combination of a weekly, a daily and an hourly chart, which I'll put here into perspective. Weekly, daily and hourly investment horizon. Pop up an explanation. Well, everything's in a bull at the moment, so the explanation is quite simple. Okay. So you're still in an uptrend on the weekly, we still have potential, still in an uptrend on the daily. Maybe a bit of an exhaustion zone here, so we're bumping in over 138 into strong resistance. But over the short term, there's probably another week to go and probably another figure. Now, if we turn to another risk assets, basically equity markets, shows pretty much the same story. The weekly is still in an uptrend. We're not going to go much further. This is already a distribution zone. You could see that if I quickly click on it, on the long term, our oscillator is well in the red, our envelopes are touching each other, and we have achieved our target. So it's still an uptrend, but we're probably not very far away from a reversal. We think it's probably coming into end of the first quarter, beginning of the second. Similar exhaustion scenario here on the daily, but still up. And on the hourly, probably another week or so to go, a few more percentage points to go. So it's not quite over yet, but it's getting expensive over the medium term. Now, let's look at rates, because they're driving a lot of this. And we are still, in general, in a correction down over the long term on bonds, so a correction up on rates. We think this is not over. The counter trend move that we've been seeing since this fall still hasn't made it into impulsive territory. It's still only a corrective move, so we would still abide to this longer term downtrend on bonds or uptrend on rates. And at the moment, a pretty neutral situation. You can see you have no targets here. So it's still a bull, but no targets. It's a bit of a wait and see situation at the moment. Now this non-aggressive tapering outlook situation, as I want to put it, is benefiting gold. Gold has seen a lot of deleveraging last year, a bit of political uncertainty also thrown into it. So it's still in a downtrend over the long term, and we do think it's only an intermediate bottom at the moment, and that we should see more weakness towards the 1,100 level, maybe lower in the second half of the year. But at the moment, we're correcting up, and it's only a correction up. And as long as we don't make it above 1383 here, it will only be a correction up. Okay. So at the moment, place this as a correction. There's a tiny bit more to go, probably not very much. And it seems like the early are well bid at the moment because they've entered into our impulsive targets. So in a correction up on gold, maybe a bit more to go, but start to watch out. A lot of the move has been done.
Excellent. Well, it does seem as though uptrends across most of the board there. We'll see whether this trend continues. But Jean-François, thank you so much for your time today. Pleasure.
You're welcome.
Thank you. Well, that's all from Jean-François and myself for the moment. Please do click back to Dukascopy TV for many more exclusive interviews. Goodbye for now.